Hello friends, my name is Vinod Kumar Agarwal. Today we are going to talk about the recent amendments to Indian accounting standards applicable from November 2022 exams and onwards. These amendments are really speaking not very important for your exam. Most of these amendments would be useful for corporates, but still these have appeared in the RTP of November 2022 and we should just go through it once. You will find all these amendments in the RTP of November 2022, so you can take the printout from RTP of November 2022. So what are these important amendments? So Ministry of Corporate Affairs have issued certain amendments to Ind AS wider notification dated 23rd March 2022. So these are called 2022 amendments. These amendments to Ind AS were issued through the Companies Accounting Standard Amendment Rules 2022. So we will call it 2022 amendments. While most of the amendments to Ind AS are in line with those prescribed for IFRS, the purpose of this amendment is to bring them in line with the IFRS. So whatever amendments have happened in IFRS, we are also going to make similar amendments in Ind AS, that all of you know, but there has been a small carve out, and that carve out is in Ind AS 16 property, plant and equipment. Sir, what is this carve out? This carve out means a significant difference. But I will tell you when we will come to this amendment on Ind AS 16. These amendments will be effective from 1st April 2022. So broadly these amendments will be divided into 4 categories. One is amendment in Ind AS 16 property, plant and equipment, which is related to accounting for proceeds before intended use. Second amendment is in Ind AS 37, and this is related to determining the cost to fulfill the contract. The third amendment is in Ind AS 103, and this amendment has been necessitated because the framework for financial reporting has also been amended to conceptual framework for financial reporting. So accordingly, whatever changes have happened in this conceptual framework, the corresponding amendments have been made in Ind AS 103 also. And then there are some very minor amendments for improvement in Ind AS. They are called annual improvement, and under this there are some amendments in Ind AS 101, Ind AS 109 and Ind AS 41. So now I am going to talk about these amendments. First we will start with Ind AS 16. So what is the amendment in Ind AS 16? First let us understand the background. The amendment is related to the cost of testing and the proceed of the amount that we get from some material which is sold in the process of testing. So Ind AS 16, what is Ind AS 16? Property, plant and equipment. Ind AS 16 provides example of directly attributable cost, which includes cost of testing also. So I hope you remember, cost of PPE will include any cost of testing, whether the asset is functioning properly or not, post deduction of net proceed from the sale of item produced while bringing the asset to required location and condition. So for example, testing cost incurred is 10,000 and you might have produced some sample. So those samples were sold. Less samples sold, 2,000 rupees. So what is the amount, net amount? 8,000. This is added to the cost of PPE. But I will take a different example now. The cost of testing is 10,000 rupees and the samples that were realized from testing were sold for 12,000 rupees. So there is an excess received 2,000. What is the treatment of this excess? Tell me. Option 1, should it be treated as income and taken to P&L account, or should it be used for reducing from PPE? Now here there is a difference between IFRS and Ind AS. IFRS says it will be treated as income, whereas the amendment in Ind AS now it says it will be reduced from property, plant and equipment. So this is a small carve out from IFRS. The 2022 amendments have clarified that the accounting treatment for excess of net sale proceed of item produced over the cost of testing means they are talking about the second scenario where the sale proceed of item produced while testing is more than the cost of testing. As per 22 amendments, this excess of net sale proceed of item produced over the cost of testing, if any, underline or remember, should not be recognized in the statement of profit and loss, but deducted from the cost considered as a part of cost of an item of PPE. If you are an IFRS candidate, then as per the IFRS, the proceed from selling an item before the related cost of PPE is available for you should be recognized in the statement of profit or loss together with the cost of producing those items. So this is the treatment under IFRS and this is the treatment under Ind AS. So remember, when you will be given a question of Ind AS 16, testing cost minus proceed, if it is a positive amount, you add it to the cost of PPE, and testing cost minus proceed of any material produced in the process of testing. If it is negative, then you reduce it from the cost of PPE. So this is the amendment in Ind AS 16. Now the next is amendment in Ind AS 37, and that amendment is related to onerous contract. So first of all, let us revise what is onerous contract. Onerous contract means those contract where the unavoidable cost of meeting the obligation is more than the economic benefit expected to be received under it. So if the unavoidable cost is more than the economic benefit, such contracts are called onerous contract as per Ind AS 37. Okay. And how much is the amount of provision should be made? The amount of provision to be made is the cost of fulfilling the contract and any compensation or penalty arising to fulfill it, whichever is lower. If the cost of fulfilling the contract is 1 lakh, but you can avoid the contract by paying a penalty of 80,000, then the unavoidable cost is 80,000 and you will make a provision of 80,000. But the question is now, in this amendment, what will be included in the cost of fulfilling the contract? This was not explained in detail in Ind AS 37. So the amendment deals with what will be included in the cost of fulfilling the contract. Ind AS 37 did not explain the item of cost that would be included in the cost of fulfilling the contract. So what is this amendment? The 2022 amendments clarify the types of cost that a company can include as the cost of fulfilling the contract while assessing whether a contract is onerous. So what we will include in the cost of fulfilling a contract? One is the incremental cost of fulfilling the contract. Incremental cost, that is the additional cost that you will incur to fulfill the contract. Example, material, direct labor. So these are the incremental cost. In addition to that, very important, tick mark, underline, it is given in your 2022 November RTP, an allocation of other cost that relate directly to fulfilling the contract. So you will also take into account allocation of other cost also, not just incremental direct cost, but also cost which can be allocated for fulfilling the contract. Example of allocated cost is depreciation charge for an item of PPE used in fulfilling the contract. Para 69 has been amended by replacing asset dedicated to the contract to asset used in fulfilling the contract. So the earlier provision was only related to assets which were dedicated to the contract. But with the amendment, now it will take into account all those assets which will be used in fulfilling the contract. So this amendment requires to take into consideration the impairment loss on all the assets whose cost will be considered in assessing the contract as onerous. So basically now the management will have to include incremental cost and all other assets, all allocation of all assets which are required to fulfill the contract, including their impairment if any. So basically the amount will go up because of this amendment. Will you be affected because of this amendment? In the RTP of November 2022, there is a question number 15 which deals with this matter as to what are the costs to be included while calculating the onerous contract. So please mark question number 15 as important because that question is related to this amendment. Okay. Now next is certain amendments in Ind AS 103 business combination. And what are these amendments? I will tell you very briefly. All of you know that in 2020, August 2020, we have conceptual framework for financial reporting under Ind AS, which is corresponding to the similar standard under IFRS. Student will know that under this standard they have changed the definition of assets and liabilities. So now while reading the Ind AS 103, the corresponding definition of assets and liabilities will be taken from conceptual framework for financial reporting. So really speaking, it is not a very significant amendment from your exam point of view, because in any case we do not go into the details of definition of asset and liabilities while solving questions of Ind AS 103. So for you, for the student, the assets and liabilities will continue to remain as it is for solving any problem. So don't take any tension. There is no amendment in 103 which will affect any of your answer. Okay. So the amendment is 2002 amendments have substituted the reference to framework for a preparation and presentation of financial statement. This was old framework, and now we have to refer the new framework which is called CFFR, Conceptual Framework for Financial Reporting, without changing the accounting requirement for business combination. So some of your friends will give you tension that there are amendments in Ind AS 103. Please note, there is no amendment which will affect you as a student in the exam. Now because of this amendment, there is one more side amendment, but not again very important because we are already doing the same thing. Contingent asset. Ind AS 103 prohibited the recognition of contingent asset even prior to 2022 amendments. All of you know that contingent assets are not to be recognized but it was not explicitly stated in Ind AS 103. Now what happened after the amendment? There is only one amendment, is that Ind AS 103 now explicitly prohibit the recognition of contingent asset. This was already there, but now they have only explicitly made it in the Ind AS 103. Then there are three annual improvements in Ind AS. These are called annual improvement to Ind AS 2021. And these amendments are basically made so that we can make our Ind AS more efficient. Okay. And these Ind AS which are improved are 101, Ind AS 41 and Ind AS 109. Again, I will tell you, you as a student are not going to be affected because of these amendments which have been given here, but it's a part of your syllabus, so just go through it once. So Ind AS 101, there is an amendment, subsidiary as a first time adopter of Ind AS. Subsidiary is adopting Ind AS for the first time. Here the amendment says subsidiary will include joint venture and associate also. So if a subsidiary, joint venture or associate together will be termed as subsidiary, adopts Ind AS later than its parent. Subsidiary, JV, associate adopts Ind AS later than its parent and applies paragraph D16A of Ind AS 101. Then the subsidiary may elect to measure cumulative translation difference for all foreign operation at amounts included in the consolidated financial statement of the parent based on the parent's date of transition to Ind AS. So under Ind AS 101, if you have cumulative translation difference, foreign currency translation difference, student will remember that under Ind AS 101 they are taken at zero value, but this amendment says you can take the value based on their amount appearing on the date of transition to Ind AS. Sir, do we have any question on this? In your study material there is no such question. Will you be asked a question on this? The chances are very less, because these are very technical and therefore the chances they will ask you a question on this amendment is very rare, but still you can keep in mind. Then there is an amendment in Ind AS 109. The amendment deals with derecognition of financial liability in case of corporate debt restructuring when the value of the liability changes by more than 10%. The student will remember extinguishment accounting versus modification accounting. If the change in the liability is more than 10%, we follow extinguishment accounting. If the change in liability is less than 10%, we just do the modification. Now, in that case, while applying the 10% test, we have to also take into consideration the fees paid. That is what we have written in our book as transaction cost. So the fees paid. So for the calculation of this fees paid, they have given a clarification that what is the meaning of fees. As a student, don't bother, because always you are given a fees in your question. But for the practitioner, they have to now minutely examine what is to be included in the fees. So the fees paid is the borrower includes amount paid by the borrower to or on behalf of the lender. Fees paid will include amount paid by borrower plus amount paid on behalf of lender, and fees received will include amount paid by lender or on behalf of borrower. So do you think you are going to be impacted by this? The student will not be much impacted by this. So this is the explanation of the term fees paid in Ind AS 109 for applying the 10% test. And there is one more small adjustment or amendment in Ind AS 41. Again, there is no question on this amendment in our book or in the institute material, but just keep in mind. So that amendment is relating to considering taxation in the fair value measurement. Okay. So earlier para 22 of Ind AS 41 prescribed certain cash flow that would not be considered for the purpose of assessing fair value earlier. One of them was income tax, finance cost. These were not considered in calculating of fair value, but what this amendment says, out of those cash flow, the amendment made in 2022 deleted the cash flow from the taxation from the exclusion list. That means now income tax will be considered in measurement of fair value. This implies that tax cash flow must be included in fair value measurement of biological asset as per Ind AS 41. So these were some important adjustments. I am sure you must have enjoyed it. Please like this video and share this video with maximum number of your final student friends. They will also be benefited. These amendments are there in November 2022 RTP. So thank you very much for watching this video. Subscribe to YouTube channel. We are going to come out with more updates on our syllabus. Thank you very much.